Hello again, everyone. It's Vince Vore from TradingWinds.com, and this is our update for January 24th, 2018. Let's take a quick look at today's markets. We saw a pretty wild swing today, back and forth, some increased volatility in today's market. By the end of it, though, we saw a bit of a mixed close. The Dow managed to recover and close in positive territory, and a new high, that is, up 41 points, while the S&P 500 recovered a substantial portion of that drop, but still closed down 1.5 points, while the Nasdaq was down a little further due to those tech stocks. We'll take a look at a few in just a moment. It was down 45 points, and the Russell was lower by about 10 points or so. TLT down again, gapping lower, did recover part of it, but closed lower by 67 cents. Gold was significantly higher today, gapping in, moving higher throughout the day, up 21 points today. A major move, getting within a stone's throw of that level we've been talking about, that 1357. I mean, 1355 was a big number here, and we're currently sitting around 1356. But this high here from last September, 1357, crucial. If we get above there, we should go on quite a run for gold. Crude today up strongly as well, up another 1.5 points. And while the dollar continues to sink here, let me show you the dollar index chart. There it is, moving down to that 89 level. Now, those tech stocks took a hit today. This all got started when news on Apple came out saying that iPhone sales could be weaker than expected this coming spring. There it goes. It dropped down. What was it? A point, almost 2%. That kind of started things going, and others dropped as well. There's Amazon down 5 points today. Facebook was down. Again, not, in the grand scheme of things, not a huge deal. A pullback here would be healthy anyway. Let me show you Google as well, dropping. And of course, Netflix followed through from yesterday's better than expected earnings, up another 10 points today. A huge move. Micron is forming a pattern that we don't see very often, but a pattern that is fairly consistent and can work really well for you. A nice wedge here. If you mark those highs and these lows, there it is. It's slowly squeezing together, and a breakout here could turn into a nice move. Now, the question is, which way is it going to break out? Well, if we look at the weekly and the monthly, and there's that wedge on the weekly, certainly momentum is significantly higher here on the weekly. And if we look at on the monthly, there it is as well, and recently took out these highs. So probability is quite high here, I believe, that we will break out of that wedge to the upside and then go on quite a run. So all we really need to do is wait for that to happen and then take advantage of it there. Another way to do it is to wait, to get above the high of that range, but the wedge gets you in a little earlier on any break above there. And especially if you see a break and then a retest of that level, normally not only will we get back to highs, but then beyond there. But let's be patient and wait for that. But keep an eye on that wedge pattern. It is powerful, and especially when you see it on multiple time frames. That's about it for now. Enjoy the rest of your day, and we will see you on our next update.